Fidelity, Schwab, Vanguard, and Wealthfront. Who has the best cash management account, and should you leave your bank for it? Hello, Diamond NestEgg members, super savers, and course fans. I hope you're healthy and well. This is the best cash management account video that many of you requested after we posted this last one on Fidelity's cash management account a few weeks back. Link below this video for those of you who may be interested. So, with that in mind, here are the 3 topics that we'll be covering today. 1. What's the difference between the cash management accounts, CMAs, at Fidelity, Schwab, Vanguard, and Wealthfront? 2. Which CMA is the best one? And 3. What should you be very careful of with these cash management accounts? And in this section, we'll cover a not often discussed risk that everyone should consider before opening a cash management account. Let's dive in now, folks. What's the difference between the cash management accounts, CMAs, at Fidelity, Schwab, Vanguard, and Wealthfront? As a refresher, cash management accounts, CMAs, are like a hybrid checking and savings account, usually offered by brokerage companies. Think of it as a separate spending and or savings account that you hold with your broker. Not all brokerage companies offer CMAs though. So here's our cash management account comparison table. In this column, we have the name of the brokerage firm. And in the next column, we have the APY that is offered via the CMA's bank sweep program and the FDIC coverage level for an individual account. Remember that even though cash management accounts are growing in popularity and an increasing number of people are using them like bank accounts, CMAs are not bank accounts. Because as I just mentioned, CMAs are typically offered by brokers like Fidelity, Schwab, Vanguard, and Wealthfront. So to keep your cash FDIC protected, brokers will typically sweep or move the money that you keep in your CMA into what they call their partner or program bank network. Fidelity, for instance, has 19 program banks that it works with at the moment. And as you can see from this list, many of these program banks are household names, such as Citibank, Boney, US Bank, and Goldman Sachs. Working with such a partner or program bank network means that most brokers are able to offer cash management account holders higher FDIC coverage levels than the standard FDIC threshold of $250,000 per FDIC insured bank per account ownership category. For example, if you had $600,000 in your individual Fidelity CMA under the deposit sweep program, Fidelity would spread that $600,000 across 3 or more of the program banks they work with so that they can keep you under the $250,000 FDIC limit per bank. Now, as an alternative to sweeping your cash into FDIC-insured banks, some brokers will also give you the option to invest the money in your cash management account into designated money market funds. And where this is available, we've put the APY on those money market funds at the time of this taping in this column. Money market funds in your CMA are typically SIPC protected rather than FDIC insured. Remember that the SIPC will normally cover up to $500,000 in securities, but also includes a $250,000 limit for cash held in a cash management account with your broker. But do check with your broker if you want more details on maximum SIPC and FDIC coverage levels beyond their standard limits. The next column in our CMA comparison table highlights any monthly fees and minimums associated with the CMA, and the last column explains the key features of the CMA. So, starting alphabetically with Fidelity. Fidelity's CMA is paying an APY of 1.84% via their bank sweep program, with up to $4 million of FDIC coverage for an individual account. If you choose to invest the money in your Fidelity CMA into Fidelity's Government Money Market Fund, SPACs, the 7-day SEC yield on that is 3.32% currently. Personally, we keep the money in our Fidelity CMA in SPACs because, well, it just pays more. In addition, depending on your state of residence, a portion of the dividends earned from SPACs may be exempt from your state's income or investment tax because some of SPACs' dividend income is derived from investments in U.S. government securities, the interest of which is not taxable at the state and local levels. In 2025, 50.9% of the dividends earned from SPACs may have been exempt from your state's income or investment tax. However, this does not apply to residents of California, Connecticut, and New York, which require a diversified fund to meet certain conditions every single quarter of the year before they recognize this exemption. And apparently, SPACs may have fallen short here in 2025, meaning that California, Connecticut, and New York residents must pay full state and income taxes as well on SPACs for that period. Gotta love the Big Apple and the Golden State. Not only are they high tax, they also restrict any potential tax relief as much as they can. In any case, there are no monthly fees and minimums with Fidelity CMA, and key features include a debit card with no annual fee, unlimited ATM fee rebates worldwide, and no foreign transaction fees. These last advantages here were actually the primary reasons for why we set up our cash management account with Fidelity. And in fact, our free CMA debit card is our default go-to card whenever we're in Europe to visit Marcus's family. Fidelity CMA also offers check writing and online bill pay and works with Apple Pay, Google Pay, PayPal, and Venmo, but not Zelle, which appears to be a deal breaker for some folks. Up next, we have Schwab. So what you should know about Schwab is that it is the only broker that we're talking about in today's video that actually has a banking arm. And perhaps this may be one of the reasons why it does not offer a cash management account like Fidelity, Vanguard, and Wealthfront do, because it can offer actual checking and savings accounts like a normal bank. Unfortunately, Schwab's proper checking account also pays normal, unattractive checking account rates at 0.01% APY. So basically, it pays nothing. The $250,000 FDIC coverage level is also pretty standard for a normal checking account. Do note that Schwab does not offer a partner bank network for higher protection. And because it's a normal checking account, the money market fund sweep option is not available either. The good news is that there are no monthly fees and minimums. And like for Fidelity, key features include a debit card with no annual fee, unlimited ATM fee rebates worldwide, no foreign transaction fees, check writing and online bill pay, and compatibility with Apple Pay, Google Pay, PayPal, Venmo, and in this case, also Zelle. Moving on now to Vanguard. Vanguard calls its cash management account the Vanguard Cash Plus account. It pays a base APY of 3.1% via their bank sweep program, with a 0.25% APY boost through April 30th, 2026, bringing the total APY to 3.35% through the end of April, with up to $1.25 million of FDIC coverage for an individual account. Like with Fidelity, this higher level of FDIC coverage on Vanguard's Cash Plus account is made possible via its program bank network. Some of these banks are well known, including Citibank, Wells Fargo, and American Express. But they also include less familiar names such as Bank of Baroda, Pinnacle Bank, and First Foundation. If you want a bit more yield in your Vanguard Cash Plus account, you can also choose to put the cash in one of Vanguard's 5 money market funds, which are yielding between 1.84% and 3.64% currently, and have a $3,000 minimum investment each. Again, these are SIPC insured, up to $500,000 in total. These 5 are VCTXX, its California Municipal Money Market Fund, VMRXX, its Cash Reserves Federal Money Market Fund, Admiral Shares, VMSXX, its Municipal Money Market Fund, VYFXX, its New York Municipal Money Market Fund, and VUSXX, its Treasury Money Market Fund. I know some of our Vanguard folks have a preference for the bank sweep program because of the FDIC protection. But personally, if I had $500,000 or less in my Vanguard Cash Plus account, I would go with VMRXX or VUSXX. Both funds show a 7-day SEC yield above 3.6% at the time of this taping, which is more than the bank sweep program of 3.35%, even with the temporary APY boosts. In 2025, 69.58% of the dividends earned from VMRXX may have been exempt from your state's income or investment tax due to its U.S. government securities holdings. For VUSXX, that number was 100%. And yes, this should be sufficient for the state and local income tax exemption, even in New York, California, and Connecticut. But for those of you in a higher tax bracket in New York or California, VYFXX or VCTXX might be even better options if you can get comfortable with a muni money market fund, because the interest you earn may be fully exempt from income tax at all levels, including federal taxation. And if you're enjoying the video so far and are interested in joining daily conversations about higher yielding income opportunities with me, Marcus, and our Diamond NestEgg VIP members, I'd like to invite you to come join our private VIP investment club. Our Diamond NestEgg VIP investment club is the ideal place for you if you want to 1. Have an extra pair of eyes for critical investing questions, 2. Get ready for the retirement decisions that lie ahead for yourself or a loved one, 3. Understand how a product works, its benefits, and its risks, 4. Be the first to know about safe and or higher yielding investments, 5. Spot and clearly understand new market trends and issues, 6. Exchange perspectives with a like-minded community, and or 7. Continue your lifelong learning about investing and retirement. If you fall into one, some, or all of these categories, visit our website after this video at www.diamondnestegg.com and click on this yellow private VIP investment club button to learn more. I've also linked everything below this video for your convenience. So, going back to Vanguard's Cash Plus account, there are no monthly fees and minimums if you're subscribed to eDelivery for your statements and other correspondences. Be careful if you're not subscribed to eDelivery, because Vanguard will charge you a $25 annual account service fee for your mailed paper statements in this instance. Vanguard CMA offers online bill pay as a key feature, but no ATM card or check writing. We as a family could probably live without check writing, but not having an ATM card is a no-go for us for a cash management account. Your situation, however, may be different. Vanguard's account is compatible with PayPal and Venmo. There is, however, a $100,000 limit on total daily transactions, as well as a possible 60-day holding period on new funds and a 7-day holding period on some transactions. So these key features are not great overall, if you ask us. But let's talk a bit more about this later on. For now, let's keep going with Wealthfront. Wealthfront's cash account pays a base APY of 3.3% via their bank sweep program, with a 0.65% APY boost for 3 months, for new clients only and for balances up to $150,000. Wealthfront also offers up to $8 million of FDIC coverage for an individual CMA. As usual, this high level of FDIC coverage is provided through its program banks, global systemically important banks, GSIBs, like HSBC, Morgan Stanley, and Wells Fargo, as well as other names that we've already seen in Fidelity's network for their CMAs. There's no money market fund sweep option with Wealthfront's cash account, and there is a $1 minimum to open the account, but there are no other standard monthly fees from what we could find. Wealthfront's cash account also offers a debit card with no annual fee, more than 19,000 ATMs nationwide, and reimbursement of 2 fees per month of up to $7.50 each. Online bill pay is available, but there is no check writing. But they do offer free wire transfers to title and escrow accounts you own at other institutions. And the CMA works with Apple and Google Pay, PayPal, and Venmo, but like Fidelity's cash management account, not with Zelle. So, now that you have a good overview of the cash management accounts available at Fidelity, Vanguard, and Wealthfront, as well as Schwab's checking account in this handy-dandy comparison table, let's move on to the next part of today's discussion. Which CMA is the best one? Now, as with most things that have to do with money, this is a very personal and individual decision. And as our Diamond NestEgg regulars know, I have been with Fidelity for over 30 years. So clearly, I like a lot of what they have to offer. But even setting aside that fact, we do think that amongst this group of 4, Fidelity's cash management account is the best one all around. It has a fairly attractive yield if you go with their money market sweep, especially when you consider that some of the dividends earned from SPACs may be exempt from state income or investment tax due to its U.S. government securities holdings, as I touched upon earlier. Fidelity CMA is pretty versatile as both a savings and checking account. I've been able to easily pay our bills and to transfer money in and out. Plus, as I mentioned earlier, what we in the Lammer family really like are the unlimited ATM fee rebates worldwide and lack of foreign transaction fees when we use our debit card abroad. If you're an active Zelle user, Fidelity CMA may not be ideal for you though. Schwab's checking account has all the same key features as Fidelity's CMA. Plus, it's compatible with Zelle. So you could argue that it even has a leg up over Fidelity's cash management account in this respect. But this 0.01% APY is just ridiculous in my mind. And Vanguard is just the opposite. The yields on both their bank sweep program and money market funds are very attractive. As we discussed before, if you select VUSXX as your money market sweep, 100% of the dividends earned in 2025 may have been exempt from your state's income or investment tax due to its U.S. government securities holdings. And they even offer completely tax-free muni money market funds for residents of New York and California. However, and that's the downside, unlike Schwab and Fidelity, Vanguard's Cash Plus account lacks even the simplest features that you would expect from a normal checking and or savings account. There's no ATM card and check writing. Plus, this possibility of a 60-day holding period on new money and a 7-day holding period on some transactions, that's just unacceptable if you ask me. And if compatibility with Apple Pay, Google Pay, and Zelle are a must for you, then Vanguard's Cash Plus account will also not work. As for Wealthfront, it may be the winner if you're looking for the highest APY and FDIC coverage limits, and maybe free wire transfers to title and escrow accounts in your name, but don't care about their limited ATM reimbursements and lack of Zelle integration. For us, the deal breaker would be that Wealthfront limits the reimbursement for out-of-network ATM usage to just 2 fees per month. That's just not flexible enough for the Lammer family. So, what we can see from this table here is that none of these cash management accounts are perfect all around, although I would argue that Fidelity CMA comes pretty close, and so does Schwab's in terms of key features, so long as you don't mind earning basically no interest on it. But let us not forget that the whole point of a cash management account is not necessarily to replace your traditional checking and savings accounts, but rather to supplement your brokerage and retirement accounts. And in that respect, all 4 of the accounts here on this table serve this primary purpose. They integrate well with their respective investment platforms. In fact, linking and transferring funds between any of these 4 accounts and your brokerage and retirement accounts on the same platform happens almost instantaneously, which makes them a good add-on to whichever brokerage firm you're with. But let's say that you are considering using your CMA to replace your traditional checking and savings account. Is this really a wise decision? Let's talk a bit about that now. What should you be very careful of with these cash management accounts? As we've talked about in previous videos, even though we really like our Fidelity Cash Management account, we're still hanging on to our more traditional bank account because we like physical branch locations. While I do a lot of things online, I still like being able to go into a bank branch if I need to, for example, to get something notarized. Now, I'm probably only there once or twice a year in the end, but it's just nice to know that it's there for those just-in-case special situations. Our Diamond NestEgg regulars have also raised a few more specific issues around cash management accounts. These are the 3 most common concerns that we've noted. 1. Longer hold times on some deposits, especially on certain incoming checks and or EFTs for newer accounts or when unusual patterns are detected. 2. Locked accounts that can take multiple phone calls and days to unlock. For example, if a large sum is transferred in or if a transfer gets flagged for some other reason, like potential fraud. With a traditional bank, you can again walk into the branch with your ID and usually fix whatever went wrong pretty quickly. And the 3rd common concern, integration issues with other third-party billers. So if you use third-party billers often, then a cash management account may not be ideal. But besides all that, there is one more not often discussed risk that we think everyone should be aware of before contemplating ditching their traditional bank account and relying solely on a cash management account for all their banking needs. Remember that CMAs are not bank accounts, and they are only now starting to gain broader attention. It's unclear to me at this point in time how the fund transfers in and out of these CMAs to other financial institutions would work if there were ever a banking crisis, think Lehman Brothers or Silicon Valley Bank. If I had all or the majority of my savings in my Fidelity Cash Management Account under such a scenario and had to transfer some or all of that money out to my JP Morgan Chase account, how long would this take? What if I couldn't log onto my brokerage platform because everyone was also trying to access their cash and investments? Now, I don't know the answer to this question, and I hope we never have to find out. But part of what Marcus and I do in our industry is to think about what happens when everything goes wrong. With our traditional bank account, we would just go to the ATM and pull out the cash that we needed, as we did in the past. With our CMA, I simply have no idea what the hiccups might be if there were ever another banking or brokerage crisis, which at some point there will be. And that is another key reason why we don't keep our life savings in our cash management account. It's being tested now in what I would call the good times. And only time will tell how all the new cash management accounts that have emerged will function in the not so good times. What about you? Have you dropped your traditional bank account completely, or do you use both? Or are you planning to open up a cash management account? And if so, which one from this table? Or do you have an even better one that you'd like to share with everyone? Drop a comment below and let me, Marcus, and the other Diamond NestEgg folks know. All right, members, super savers, and course fans, I hope you enjoyed today's video and learned something new. And as always, if you're interested in having regular conversations with me, Marcus, and our Diamond NestEgg members about investing and retirement, or if you're just looking for other safe ways to generate additional income from all the cash that's sitting in your cash management account, either via corporate bonds, high-yielding bond funds, covered call strategies, preferred shares, and other investment vehicles, I'd like to invite you again to come join our private VIP investment club. Just visit our website at www.diamondnestegg.com and click on this yellow private VIP investment club button to learn more. You can also find the link below. And if you want to dive deeper into the cash management accounts at Fidelity, Vanguard, or Wealthfront, I've linked all these videos below for you as well. And this Wealthfront one is actually Ava's step-by-step tutorial on your financial journey. So see you again very soon with more brand new wealth building content for your financial journey.